Welcome to another episode of Banking Transformed, the podcast that dives deep into the trends, innovations, and strategies shaping the future of banking. I'm your host, Jim Marous, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. As the lending landscape continues to evolve, financial institutions must embrace innovation and collaboration to remain competitive. In this special mini-series on the future of lending, sponsored by LoanPro, we're joined by Charlie Ma, co-founder and managing partner at Exponent Founders Capital, and Colton Pond, chief marketing officer at LoanPro. They will discuss the key trends and themes in credit and lending, emphasizing the importance of distinguishing between noise and genuine opportunities. Charlie and Colton will share their perspectives on the impact of artificial intelligence in lending and highlight examples where companies have successfully integrated AI to revolutionize financial services. As technology advances and customer preferences shift, banks and credit unions must embrace new ideas, technologies, and partnerships to transform their lending processes and offerings. One of the biggest impacts will probably be the result of AI integration, driving significant innovation opportunities and transforming the products and experiences for borrowers. So, Charlie, let's start with you today. As an investor, what are some of the most promising collaboration opportunities you see between traditional and non-traditional providers in the lending space?
Yeah, it's a great question. But first of all, excited to be on the podcast with y'all. It's an honor. A long time reader and fan, Jim, of everything you've put out there for the industry. So excited to chat. And Colton, good to see you as always.
Thank you.
It's a good question. I think right now we're entering an interesting time as it relates to kind of fintech partnerships and banking partnerships, right? One of the things that I've been talking about, or at least what I've sort of seen across, I think the B2B fintech landscape, is that it felt just to me the last, 5-6 years or so of quote unquote investment in fintech was really kind of, fintech infrastructure built for fintechs or built kind of for the disruptors, right? It was a lot of, hey, there's a lot of these neobanks, there's a lot of new potential kind of early stage fintech companies geared towards businesses, towards consumers, and a lot of the investment and infrastructure opportunities was being invested in companies that were enabling those type of companies, like kind of the quote unquote disruptors at the gate. And it makes sense, right? I think that if you're a larger financial institution, right, typically more risk averse, which I think makes a lot of sense, and want to see these use cases really proven out in the field, right? But what we see now is that I think as the fintech industry has matured to where we are now, we have started to see fintech companies get to real meaningful scale that is quite impactful. And as a result, the infrastructure that a lot of these companies are built on top of are quite robust, right? So I actually think we're now entering a bit of a golden era, I think, around sort of fintech partnerships between banks and fintech infrastructure providers. But we're also seeing, I think, a lot of regulatory headwinds, right? Obviously, I think there's been a lot of news on this whole thing is around sort of banking as a service and what's happening in the ecosystem around sponsor banks there, which I'm sure we'll get into at some point. And so I think it's both an opportunity for best-in-class, infrastructure providers across the fintech landscape to start to actually be able to partner with financial institutions that have been around for much longer. And it's one of the areas that I think I actually have been quite interested and excited about. It's taken us a few years, is particularly around, I would say, lending and underwriting, right? I think we're starting to see the adoption and usage of real-time data incorporated into various decisions. Probably, I think a lot of the advancements initially started off in SMB lending. And we're now starting to see that, I think, start to come to effect in consumer lending, but happy to dive in further.
So sticking with you for a second, Charlie, you see there's been so much activity in the payment space, obviously. Do you see that activity then becoming a lot more like a lending product? Because they're really not that distinct in many ways, even though they're very different in the way you implement them. But, buy now, pay later is a payment product that really is a lending product as well. Do you see a lot of that really making it so that the lending space is going to get hyperactive?
It's a good question. I think that what we're at least I think what we're starting to see are more and more companies wanting to get access to actual consumer and businesses, right? And it turns out I'm I've been in fintech for a very long time. I love working with and using fintech products, but I still bank with a good old fashioned bank, right? I think there's still a high degree of trust that you give towards a banking institution, right? I think there's been a lot of marketing and say on, you want an all digital experience and you only need a mobile app. And I think at the end of the day, when it comes to complex decisions, you still want to talk to someone that understands your background, someone that's able to have a deep sophistication around the financial products that they have. And like, I still want to go to a branch. I still want to call into somewhere and talk to someone about a complicated financial decision, right? And I want to talk to someone that has a good understanding of the relationship that I've had with that institution for a long time, right? And so I think that a lot of the movement across, for example, with Buy Now Pay Later, I think we're just starting to see early signs of this. There's just a lot more partnerships with networks and ecosystems that have access to a large base of businesses, a large base of customers. And that could be a bank or financial institution. It could be a large merchant. It could be other providers. But I think that sort of partnership model and distribution and I guess other people, you can call it embedded fintech, but I view it as it's just another form of distribution that a lot of people are kind of starting to partner up with.
Great. And Colton, from your perspective, I've said often that in order to innovate, you need the back office to be fixed. You can't innovate a great product and have a legacy operating system because eventually it's going to break. It's just not going to be as efficient, not as seamless, not as overbearing from a consumer standpoint. How does LoanPro help with the products you have to really provide the platform where innovation is possible?
Yeah, great question. To your point, I think to disrupt the next wave of innovation, I love Charlie's point on banks and credit unions have a significant amount of trust. And I think we've even seen that with the larger institutions. If you looked at Silicon Valley Bank and the failure of Silicon Valley Bank and where funds flowed, JP Morgan got a big bulk of funds, and then Brex got a big bulk of funds. But those funds were just like to quickly go to Brex because they had quick instant payments and then go somewhere else. And we see lots of big trust in these financial institutions. And there's a huge opportunity for banks and credit unions to garner that trust and to create modern, unique experiences on top of a modern infrastructure and to slowly modernize their infrastructure on top of their core banking platform.
So when you're looking at organizations today, you're seeing a really strong trend away from build to either a buyer collaborative experience where they're either buying products from let's say a fintech provider, or even more importantly, collaborating with those organizations such as LoanPro that actually gives them the foundation, the ability to innovate going forward.
100%. And this goes back to what Charlie mentioned on previously. Fintech was very focused on enabling other fintech. And we've seen, especially over the past year and a half, fintech focused on how do I enable banks and credit unions. And to your earlier point, it would be remiss if I don't mention it on payments. I do see the world in which payments and lending and credit become more similar and more combined. Visa announced at Visa Payments Forum their flexible credentials product, which is not available in the US yet, but they said that there will be pilots late 2024. But that essentially is, I have a card. This card is an access point to any access of funding I have. Yeah. That may be my debit account, it may be checking, maybe savings, maybe consolidating my wealth account, my 401k, selling something from my wealth account, and to be able to pay. It may be a line of credit, it may be a credit card, it may be an installment loan, it may be a home equity line of credit. And in real time, I'm using a card as an access point for all these payment methods. And that's the future of combining lending and credit together, or phone, right? Tap, right? Is probably a better way to put it today. But the idea is, as you modernize your infrastructure, those are the types of things that are possible, where in today's infrastructure of these legacy infrastructure that's 30, 40, 50, 60 years old, those experiences aren't possible because my core system or infrastructure doesn't support it.
So to that point, It's over a decade ago. I had a friend who worked for a Polish bank, and they built a brand new mobile platform that allowed almost everybody, I think it was 80% of their customer base, to get some version of a line of credit, and had it made it so you could access it either through an overdraft, if that was the case, or by an additional, just a push of a button on their mobile banking app. Now, that took some innovative thinking. Number one, you were looking at credit in a different way, because it wasn't about a $1,000, $2,000 line of credit. It was everything from a $100 line of credit up to those kind of levels. In addition, instant access. So you were continually evaluated based on your most recent credit bureau. That's instantaneous. But the flow of data, the flow of between organizations, between product lines was such that if you wanted to move credit into a savings account, if the rates were inverted or something like that, you could do it. What amazes me is that very few, if any, organizations today offer that all-in-one credit availability to virtually their entire base. And part of that has to do with senior management within the company never embracing the fact that a small line of credit can make them money if you do it across the whole base, because you're going to retain those customers. How does that type of innovation happen?
Great question.
And how does your platform actually support, as you just mentioned, the integration of all these products into one that's easily accessible and basically seamless between products?
So to your last point, LoanPro is the modern, I say the modern lending credit platform to launch any class of loan, line of credit, and credit card. So there's a really cool synergy between I have a credit card and I swipe my credit card and it's $5,000 at Home Depot. I'm probably doing home renovation. And if I'm a bank, I should probably ping that customer and say, hey, would you like a HELOC? And would you like to roll that $5,000 transaction you just made at Home Depot into a home equity line of credit? And now I have my home equity line of credit there. To your earlier point, though, on expanding the availability of credit, we actually have a customer, one of my favorite customers, Aero Finance, a small fintech that does credit cards. And they're famous because they offer the smallest line of credit available today. And it's a $50 line of credit available to thin file, no file folks. And what they've found a way to do is they offer that $50 line of credit attached to a credit card. And then if you make an on-time payment, it goes to $100. If you make 3 on-time payments, it goes up to $300. And you do certain actions and they infer your actions, then they increase or decrease that available balance in that line of credit. And eventually, the hypothesis is that's going to grow and they're going to become very profitable customers.
So you could have an overdraft in your checking account. You pay it off with a credit card. You're not going to be penalized at $35, but you're going to get another $50 line of credit on top of the 50 you already had. It's kind of like a win-win. That you get out of trouble and you get, given something in return. Charlie, from your perspective, there's no lack of great ideas out there. Certainly in the financial services space, there's a lot of great companies out there. What gets in the way of financial institutions saying yes or actually implementing them, the other apps, buying it and then implementing it in a clunky way that isn't really the way it was meant to be presented?
Yeah, it's a great question. Something that I think a lot about when we're talking to founders that are building and they're trying to partner with financial institutions is that got to realize that interoperability is extremely critical into the stacks that they're using and the current workflows and processes that currently exist within the bank, right? When you're working with a bank, it's not, hey, integrate this API and we're going to be good to go tomorrow, right? It's, well, no, you have to be able to really understand what did the branch bankers do? What are the underwriters doing, right? What does the back office do? What products and tools are they using? How do you actually embed and make their lives better, right? And so it's actually, it requires a lot of investment and time into a partnership, right? And that's where I think I usually see things go wrong, right? Where there's failure modes on maybe, the bank CEO or chief innovation officer comes in and brings in hey, we got to use this brand new AI tool, right? I want to deploy it. I've signed a big contract and we're pushing this out, right? That's a really, really big failure mode, right? There's another one on the fintech company or the infrastructure provider comes in and they're really excited and, hey, I want to go live in a month, right? And they haven't really invested the time and effort to really understand what are all the different processes, what are the key integrations, how do they make sure that they actually have interoperability within all the different Blank's platforms, right? To actually drive a successful implementation and actually drive results for what actually matters, which is the end customer and what you're actually doing for the end customer or member of that financial institution. And so usually it's often more so It's funny. Founders complain all the time of, well, it takes forever selling to a bank, right? But there's a very good reason why. Where at the end of the day, too, banks are regulated, right? And you can't really make a mistake, right? If you make a mistake, it turns out, it's different than when you're selling, selling some productivity tool, right? If you make a mistake, no one's losing money off of that, right? But when you do make a mistake with something that is touching someone's money, that is a lot more drastic. And so as a result, there's just a lot more effort, I think, that's required to activate those partnerships. But on the flip side, if you're able to build those trusted relationships and invest the time and effort, like those are where some of the best customers and partnerships really start to emerge.
So go ahead.
Charlie, I love your take and feedback. What I love about your role throughout your career is you essentially spent time at three of the most iconic fintech companies in the early days with Plaid, Ramp, and Alloy, and building out the go-to-market, what that looks like. And then today, as an investor, you see a lot of fintech companies. I'd love your take on advice you give to fintechs on how to ensure partnerships with banks and credit unions are actually successful. I read a stat the other day that 70% of partnerships that are actually signed with a bank and fintech never go live. What's the insights that you've seen across fintechs that you've worked with that ensure those go successfully and help enable innovation?
Yeah, it's a great question. I think something that we spend a lot of time talking about is, building a product for a financial institution, for a bank, isn't like building a quote unquote regular startup, right? You can't move fast and break things. You can't just roll this out and experiment and we'll see what happens, right? It requires you need to have a product that is extremely robust to mistakes, right? Which is usually actually a function of time and just a lot of product or robustness being built and being able to be patient with those processes, right? And so I think that oftentimes I talked to a lot of founders on just having the right mentality around what does it mean to actually work and partner with a bank, right? I think the vast majority of banks, they're not viewing this as this is an option and in the next 2 years, we're going to look at another provider and swap it out, right? Generally speaking, when you select a provider, you're selecting them for multiple years, if not multiple decades, right? And so as a result, it's almost like a marriage, right? Where you're going to want to spend a lot of time with that vendor. You want to have a lot of case studies and proof points. You want to understand, what's the impact you're going to drive, and you want to have a high degree of trust that 10, 20, 30 years from now, if you're a core part or critical part of my infrastructure, I can depend on you, right? You'll continue to be around, right? Which is why I often think that the hardest thing as an early stage company is solving that chicken and egg problem set. And so I often talk about, well, how do you start off with, at least on the initial use cases, maybe more lightweight use cases that are more robust to mistakes, right? If you're coming out of the gates and saying, I want to replace your banking core, right? It's not going to happen. The number of founders that I've met that says, well, I want to go after the FIS, the Jack Henrys, and I'm going to rip out all these on-prem cores. We got to move all these banks to an on-cloud platform. And I always go, good luck with that. It's not going to happen, right? That is the third rail that you don't want to touch because so much is dependent on that great infrastructure. If something goes wrong, that is potentially business ending, right? And so early on, we talk a lot with our founders about how do you start off with wedge use cases that can quickly demonstrate a lot of value to that bank while also being robust to mistakes. Some of those tend to be, for example, in customer support and on kind of handling tickets there, right? It could be more of I think what we're seeing, for example, with AI, a lot of kind of co-piloting type use cases on how do you help operational teams, back office teams to be more efficient, right? In the case of Loan Pro, it's how do you actually handle document ingestion? How do you actually handle digitizing all the processes that should be and just making the bank more efficient and operate better for the end customer? And those use cases tend to be, I think, really, really good ones to just start off with.
So, Charlie, what have you seen at your company that excites you in the whole realm of lending innovation? What and besides Loan Pro, what organization has really piqued your interest and said, this is a pretty good solution?
Yeah. It's a great question. I mean, I'm always happy to shout out the previous companies I worked at. Those are the ones I know the most, right? I think, for example, in Plaid's use case, right? I think we're now starting to see the adoption of open banking data in the United States and kind of consumer permissioned transaction data incorporated as part of underwriting decisioning. I think we're still in the early innings of that use case. But I'll take RAM, for example, right? I think that was one of the key innovations for us as part of underwriting was being able to connect into a wide variety of different data streams about a business to get a more comprehensive understanding when we're underwriting it, right? Where we're not just relying upon, historically it'd be if I'm underwriting an SMB, it's I would pull in the credit score of the beneficial owner, right? And maybe a little bit of information about what the business does, and that's pretty much it, right? Now there's a lot more data out there. There's a lot more ways to get access to more and more data about that business. You can have a much more comprehensive understanding of that business and underwriting that. And then finally, with Alloy, my previous company, for example, one of the products that I helped build there was our onboarding decision engine and being able to incorporate a wide variety of different data signals, both at onboarding and also at sort of ongoing transaction monitoring to be able to catch fraud at the onset, and then leveraging AI and machine learning to pull in a variety of different data signals and detect when would there be potentially sort of breakout fraud across your customer base. And then the key thing for all of those was interoperability into the core infrastructure providers that actually matter for those financial institutions.
You know what, Charlie? Great example. I'll use Alloy because I have a question for you. Alloy, we work with a lot of companies that want to find that perfect new account opening experience, that front end. And I've had Alloy people come up to me and go, my example is spot on in that the biggest problem with Alloy is bankers that mess it up, where they say, yes, I want to use this, but I want to start with a driver's license. And it just breaks what was built. From your perspective, number one, what have you seen in the marketplace? Because you have a lot of clients, but you're still a new fintech. Yeah. What have you seen in the marketplace that you say, this is really going to determine whether or not it's going to work or not, where the relationship's going to work? So what is a key element that says, I feel pretty good about the success of my implementation because of this? And then the alternative, what is the one thing that kind of say, oh, geez, I sold it, but in my back of my mind, I'm not too sure if it's going to go live. What are those elements?
So I think there's two to call out. One is, and I do some angel investing, not nearly as much as Charlie. I want to get to the point that Charlie is. Charlie's like the state that I want to get to. But in talking with a lot of fintech founders, there's a lot that have interesting ideas. Most have interesting ideas. And most think, yeah, I'm going to sell to banks and credit unions. One of my first questions is, do you understand how banks and credit unions operate?
Right.
Do you understand their needs? Do you understand what problems they're going after? And it goes to a conversation we just had on understanding the customer. If you're a fintech and your customer needs to be banks and credit unions, how do you understand them? How do you make sure your product actually solves a real need that they have? And today in the current banking environment where deposits are shrinking, interest rates are high, and it's causing banks to compress and try and improve their margins, they are only spending money on things that actually fix problems and actually drive value. The second aspect is knowing the underpinnings of a bank and how many people you need to get consensus with. I've seen lots of partnerships where they get consensus within one group and they sign it, but maybe it was the product group, but the IT group had no idea about it, and the marketing team had to do something, had no idea about it. And then after signing it, they got to take a whole step back and be like, now we got to go through this whole kind of like sales process of IT and marketing, and maybe they have other ideas. And it's the importance of driving breadth of cohesion and awareness around the impact you're trying to drive at that financial institution.
How about the financial institution itself? What aspects of the financial institution are key for the ability to turn on something new? Because, we know change sucks. I say that I think in every podcast now, but the bottom line is no one's dying to change what they currently have. Nobody's trying to get out of Jack Henry or FIS or Fiserv, but they're still looking for new things. From a financial institution perspective, as you're meeting with them, what is a key element they've got to have in place in order to make that new solution work? And then the alternative to that, very similar to what the last question was, is what is the one thing that you go, this financial institution, it's not going to go because of this? What's the positive and what's the negative from the financial institution side?
My recommendation generally is, how do you do a crawl, walk, run? So oftentimes banks and credit unions can overcomplicate it. Well, it's got to integrate with this system, and it's got to integrate with Fiserv, and it's got to integrate with this and this and this. And it's like, okay, maybe, but how do you look at things outside of that?
Yeah.
How do you launch something on its own to test and prove that it works, and then expand the use case? That's the most successful banks and credit unions I've seen. Lots of them have started to stand up a de novo digital bank, and where is their innovation hub? It's like, hey, we can test new products here, and we can see if they work. And then if they work, we can roll them out to the mothership and drive the value
by the way,
from
if
them.
they don't, we're going to feel, because companies will say, yes, we want to do this, and if it works, we'll roll it out. But are you willing to turn it off?
Yes.
And that's a hard one, because that's not traditional banking. Traditional banking is, I'm going to test the living daylights out of it. I'm only going to make something go live if I know it's going to work. Sometimes it's better to not have that happen.
One of the problems, though, and the reason being, is if you rely on your core and you think everything needs to be connected and integrated, say Fiserv, my score with Fiserv, it will take you 12, 18, maybe 24 months to launch that.
If you're lucky.
There's a lot of time that you invested into doing so, right? Yeah. Just to see if something works. But if you're able to find an innovation ecosystem where you can test out new ideas and products in a safe way and quick, fast, and easy, then you can actually see value, no value for us, and let me roll it out and drive more value.
So Charlie, not many conversations go on nowadays without somebody bringing up generative AI. Mm-hmm. How do you see generative AI changing the lending process or the ability to lend, which I'm looking at that as a little bit different. Not the hard stuff, but the soft stuff as well.
Yeah, I think we're still definitely in early innings on LLMs, right? And I think that we're starting to get a better understanding of what are LLMs actually good at, and also I think the downsides of there's a lot of failure modes with LLMs, right? I think generally I tend to bucket what are LLMs actually good at, right? They're actually good at text generation based off of given specific prompts. They're good at processing vast amounts of information and kind of summarizing. They're pretty good at information retrieval across vast amounts of information, and they're very good at things like code generation, right? And it turns out they're always on, right? But there's a lot of things that we now realize that LLMs are not good at, right? They make stuff up, they hallucinate. Depending upon the training data, there is bias and fairness issues, right? The output is non-deterministic, right? And if I told any of those things are very bad when it comes to lending, right? Yeah. Right. And so as a result, I think that we're still in the sort of early innings on really leveraging LLMs in production use cases as it relates to underwriting, right? But we're starting to see, at least I've been starting to see some interesting and exciting use cases, right? So first of all, I do think that a world where we've reached AGI and it's replaced us, I think we're a long ways away from that, at least definitely within financial services, right? Where a lot of the more successful deployments of LLMs within FIs, I think have been as more of a co-pilot type structure, right? Where you're augmenting an existing human capability, right? Whether it could be your underwriting team, right? And it's, hey, it turns out when you're underwriting an SMB, you have to process 100 documents, right? We already know that you have strict SLAs when you're underwriting a loan because you want to have a really seamless customer experience. And so as a result, there's no way that you're going to process 1,000 pages of data with a person reading through it, right? You might process the most important documents, and that should always be done by a human. But there could be a lot of other extra information that you can incorporate in that loan. Some of it may be extra, but some of it actually could be really, really critical. Great, that's actually something that an LLM could be really fantastic on, right? Identifying extra signals that could be high signal for you as part of an underwriting origination system. Document processing, it tends to be quite more, I think, a lot more deterministic, and you could put a lot more boundaries and controls around it, and it's a lot easier to QA. We've seen a lot more use cases around there where LLMs versus, say, a more traditional OCR technology has been much more successful at deployment there. And then I do think early signs around kind of customer support and servicing, right, where if you have to do dialing with an offshore team, if you have to do collections with an offshore team, a lot of those could be done with a very well constructed LLM that's specifically built for that use case, but we're just starting to see some use cases that emerge around there. But I still land at there needs to be a lot of supervision required because of how non-deterministic a lot of these LLMs are right today.
So, Charlie, I'm gonna take a question I gave to Colton and give it to you as well. We sometimes think that the field of dreams, if you build it, they will come. And there's a lot of great solutions out there that have fallen on their own weight either because people didn't know how to implement them or organizations didn't know how to sell them. There's a lot of other instances. You've been at your previous organizations, all have done an extraordinarily good job of deploying, at least looking from the outside looking in, deploying in a way that was meant to be deployed. In other words, they brought value, they got bought, they got implemented correctly to some degree at least, and they succeeded. But there's a lot that's been left on the cutting room floor for one reason or another. What gets in the way between innovating and building and deployment that really we sometimes miss in the whole innovation process?
Yeah, I think that I think one of the kind of classic traps that I see is founders or executives that sort of fall in love with the vision, right, and sort of lose sight on what actually works and what actually will get implemented within an institution, right? Where we can talk all we want about, I think there's a lot of boardroom discussion on AI and how it's going to replace, humans on manual operational tasks and all that stuff, right? And that's great to talk about in theory, right? And I think if you spend too much time, talking at more maybe that exec boardroom level, and you don't actually spend the time talking to your team members, talking to actual customers, talking to whoever's actually doing the work and understanding, okay, how would it actually drive efficiencies? How would it potentially replace what the work is doing? What end processes that actually affect? If you don't actually take into account the actual end workflows that you're trying to inflect, trying to improve, or trying to completely change, I think that tends to result in products that don't actually make a lot of sense, where on paper sounds great, the demo part looks amazing, and then when it comes to actually getting value from that product, it falls very, very short.
Colton, great. By the way, Charlie, great answer. And we take a lot of that for granted, and that's where the gap is. You look at Plaid, it's a relatively involved product, and as is Alloy, and it's interesting because we can in our minds oversimplify it and miss the biggest possible gap. Speaking of gaps, go ahead.
To that point, I was going to mention, you even see it, Charlie, in Plaid, for example, right? There was a long time where Plaid was not a CRA, right? And was less focused on lending from some of the things that Zach and others mentioned. But you've seen a significant, I wouldn't say shift, but probably expansion over the past 2 years. Now they're CRA. They did this agreement or partnership for cash flow underwriting with Prism Data and others. And your point is spot on. I think one of the biggest failures happens when you get tunnel vision and I have the vision, I'm going to go achieve it, relative to let me hear what the market feedback and what the market is telling me to do.
100%.
So from your perspective, we at the end of the day have to think about the consumer, the end consumer. You're in the marketplace all the time. You're talking to organizations, you're in the lending area. Yes, you're talking about your product, but you really, I know your habit's pretty good. You're asking questions about the entire realm of the lifespan of a loan. What's the biggest gap we have today from the consumer standpoint between what's possible and what's being delivered?
Oh, you asked a great question. So first, I'll mention one thing, and then I'll get to your question. You're right. When I joined FinTech back in 2019, one of my first jobs was to go travel the U.S. With, at the time, our co-founder, or the organization I worked for, co-founder, CTO, and go visit with banks, credit unions, FinTechs. And I would always ask the executive, what are your priorities? What are you focused on? What does it look like and why? And back in 2020, 2021, everyone was like, SMB banking, focus on small business. And Charlie mentioned it, right? But a little hot take on my side, we've seen very little innovation come from banks and credit unions and small business banking over the past 3 years.
Correct.
Like, they've been talking about it, but not doing anything. And the more I talk to banks now and credit unions in 2024, I see them starting to do things about it, which really excites me. because previously small businesses have either been lumped in, oh, you're a consumer, let me treat you like a consumer.
Or you're commercial.
Or you're a commercial. And they're neither.
Right.
Some of them may be a single member LLC, but it's not. They're consumer financiers who are trying to run a business. They have different goals, different jobs to be done. They're definitely not a commercial client like McDonald's or Walmart or one of those. And to answer your real question is, you need to understand the segment you're going after and try to find ways to attract that segment in the right way. Launching products, modernizing your infrastructure. I personally believe one of the biggest opportunities is folks have focused on origination a lot over the past 4 to 5 years. Almost every bank or credit union now has an online origination flow and process and a decision engine from someone like Alloy, or maybe it's Encino or someone else. Where there's been much less focus is, and the reason why I came to Loan Pro is on the loan servicing collection side. How do you build a best-in-class experience, touching the customer, touching the member in unique ways? And I love Charlie's point on looking at ways that new technology like AI can play in that customer experience. I've seen some really cool things from folks like Airbnb, where Airbnb now has a virtual assistant where if I'm a host and I have problems, I can video chat with this virtual assistant that has facial expressions and everything. And when I ask her a question, she's able to retrieve the information and give it to me in a way more efficient way. And I think there's a lot of unlock on how do you service the customer and the member in the right way.
You know, essentially, I'm going to take that a step further and talk about your origination side, saying, yes, we have 80% that now can take an application digitally. The challenge is, but is it fast and is it easy and seamless? And it's not. So the gap, and I think is important, is we got to do the basics exceptionally well. You know, I look at Apple Card and go, the application for Apple Card was a 4-step digital process where I only had to give my social security number, my annual income. I had to look at my personal data and say, is it right already? All pre-filled. And then how much money do you want? We got to get it down to that simplicity, to a DIY perfection where we get the basics perfect. And as you said, fix the back office so we don't step all over ourselves after we've gotten the loan. Charlie, you know, as we kind of wrap up, what do you think is the major thing we need to do as financial institutions and as fintech providers to make lending better going forward? What is that gap, and what recommendation would you give to both fintech companies and financial institutions when it comes to innovation?
Yeah, this is a super simple answer on my side, but I think just continued discussion in forums like this, right? Where I think that particularly at the exec level, just being able to talk to and understand what are the capabilities that could be possible, right? That are maybe 4 or 5 years out, right? But just start to think about what does the realm of possibility start to look like, and actually start to, and I actually think the other part is highlighting actual successful use cases within banks and FIs, right? I think that a lot of times, if a bank finds a successful partnership, they'll kind of keep it secret. It's almost as I'm trying to keep this alpha contained within me, and I want to bear hug this amazing thing. I don't want to tell anybody, right? And I think that it ends up. I actually think that most FIs are actually more cooperative than not, right? When it comes to their customers. And their customer base. And I think just having more of that dialogue and discussion of actually successful implementation of partnerships and use cases, and having more of those in on the world just helps us actually understand where actually can we actually innovate and bring new products and solutions in.
And how can we learn from other peers on what they've done and how they're doing it? Along those lines, I have one other quick question for you, Charlie. Because you see so much in the fintech and financial services space, outside of AI, and everyone wants to talk about AI, and you gave the best answer that I've heard in a long time about AI and how to actually action on AI. What are a few other trends that you're seeing within banking and fintech in general that folks should be paying more attention to, but they're not?
Yeah, I 100% still agree with Jim. I still think that, we kind of got the first wave of digital account onboarding and everyone has a digital application, and we've made it easier, right? Where you don't have to go to a branch now, right? For a lot of providers, and you can do it online. But I think the consumer expectation, whether you're running an SMB or even just a consumer opening an account, they want that Apple Pay experience, right? They're like, hey, Apple is offering me a card, and it takes literally I can get the card provision and start spending instantly, right? And that is the bar that I think consumers are looking for. And so I do think really nailing down the basics, and it turns out Apple's always been right in that sense of nailing down making it look really, really simple is really, really complex, and the devils and details there. And then I think the one area that I am actually interested in around AI is I feel as though every 3 years we talk about this dream of extreme personalization of product experiences, of offers, of relationships from the banker side to the end customer. And I think that with the advent of LLMs, it'll actually allow for that to actually happen, right? Where you can actually, instead it was, I can't afford to, have a banker dedicated to every single person at the bank. It's only qualified for my ultra high net worth individuals, right? Everyone else, you kind of go to a one size fits most model, right? I think now with LLMs, it's still really, really early, right? For all the downsides we talked about before, but I think we're going to start to be able to actually see the promise of personalization and an actual utilization of data. But also to Jial's point, turns out, junk in, junk out when it comes to data. The most important thing is at the end of the day, fixing your core infrastructure, making sure you're actually having access to a unified data stack that you can actually draw insights out from. And the AI is not going to solve that, right? That's just your core fundamental architecture, the providers that you're picking, and how you're just running your bank or your FI.
Well, it gets down to listening. I brought this case study up a lot lately because it happened recently. Is that, I was trying to find a local Jeep dealer that I couldn't remember the name of that I'd been to before. And I was asking my wife at our house and saying, geez, do you remember the guy's name? No. I look over her shoulder and see that on my Hulu screen on my TV, in the middle of the news, they cut into a commercial for this one dealer. Well, that wasn't the dealer that I wanted to know about because I knew about that one. The next commercial, immediately after it, was the dealer I wanted. And what that means is that the consumer is getting more and more used to being listened to.
Yes.
I think Bank of America has an amazing lead on everybody when it comes to LLM because of all their experience with Erica. We laughed at it at the beginning and said, well, it's cute, it's fun. But the reality is the amount of data they collected in the conversations that they had with their customers, a massive number of digital banking customers, puts them in an enviable position when it comes to generative AI and being able to deploy against that. Finally, Colton, from your perspective, you see a lot in the marketplace. What's the one recommendation you give financial institutions today to be able to innovate better?
I'll go to a lesson recently that I was talking with our co-founder and CEO, Rhett, who started Loan Pro 15 years ago. And I was talking to him about lessons he's learned over the past 15 years. And he started Loan Pro very differently. Loan Pro has been bootstrapped, not venture capital funded, cash flow positive from the very first. And I was like, hey, what lessons have you learned? And one of those was take strategic bets on innovation. We were customer number 47 on AWS very early on, and we saw not me, Rhett and the founders saw that's an innovation that we believe that we can build on and will be the next wave of how everything. And now today everything's in the cloud, right? Everything's built on either Google or Microsoft or AWS in some capacity. But I think the hardest thing to do, and the reason why Charlie brought up these forums of banks learning from banks and credit unions learning from banks and fintechs learning from banks is important because you have to cut out reality from the noise. Yeah. And that's the hardest thing to do.
Oh, yeah.
But when you see that and you see things that are working in other institutions, the early adapter move or entry is real and impactful.
Boy, that's so important. In the banking world, we used to use the word fast follower. We were neither fast and we were always a follower. And the reality is, because everything's happening so fast, there's very little prize left if you're a fast follower. It's just a matter of keeping up. Charlie, Colton, great conversation. I really appreciate your time today. I think we covered a whole lot of ground. Charlie, good to meet you for the first time, I believe. And Colton, always good to be with you. So thank you very much, both of you.
Thank you, Jim. Charlie, thank you, my friend.
Yeah, no, thanks for having me.
Thanks for listening to Bank and Transform, the top podcast in retail banking and the winner of 3 international awards for podcast excellence. If you enjoy what we're doing, please be sure to give us a review, and a positive review, hopefully, on either YouTube or on our podcast channels. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, audio and video producer, Kay Holmberg, and video producer, Will Pritz.